Hey everyone, welcome back to the Crypto Code. There's been a lot of talk lately about the Ethereum Foundation and reports that they're connected to wallets holding over $650 million worth of ETH. Wallets that have, in the past, been used for selling, and now that kind of headline grabs attention fast. Some people instantly assume Ethereum's about to dump, but before we jump to conclusions, it's important to understand what's really going on behind the scenes, because in many cases, what sounds bearish on the surface isn't necessarily bad news. It can actually reveal something much smarter happening under the hood. Let's talk about it. Before we jump into today's topic, we want to remind you that here at the Crypto Code, our goal is to provide you with the top news, research, and tips when it comes to finding projects with huge profit potential. Stay to the end of this video and learn how you can earn $10 in Bitcoin and a free weekly trade alert just for attending one of our free workshops to learn more about who we are and what we do. No purchase needed. Our trade alerts have a 93% win rate, so make sure you take advantage of this free alert. Remember, I am not a financial advisor. This is not financial advice, so do your own research before you make any crypto trades. Okay, so the Ethereum Foundation has always managed its funds strategically. They frequently move ETH between wallets for things like funding research and development, providing ecosystem grants, and even handling over-the-counter deals with institutional partners. These are operational decisions, not panic moves. For example, one transfer involved around 10,000 ETH, worth more than $40 million to support continued development. Another 10,000 ETH was sent to an institutional treasury partner through an OTC transaction, meaning it didn't touch public exchanges or impact open market liquidity at all. So when people see a big on-chain transfer and assume the worst, they're often reacting emotionally instead of logically. Wallet movements don't always mean dumping. Sometimes they're just part of normal business operations, and that's where headlines get dangerous. Foundation selling, or Ethereum crash incoming. Those stories generate clicks, not clarity. But the truth is, Ethereum's fundamentals haven't changed. These on-chain transactions don't automatically signal weakness. In fact, if you look closely, the data still shows Ethereum holding up extremely well around a major support zone near the $3,000 level. That's a range which has acted as both resistance and support multiple times in the past. From a technical perspective, Ethereum's structure is actually looking pretty healthy. On the higher time frame charts, ETH has been moving inside what's called a falling broadening wedge, a pattern that often leads to bullish reversals when momentum flips. Even when you zoom into shorter time frames, the price continues to find strong support within a long-term accumulation zone that's been intact since early 2023. Each time Ethereum retests this area and holds, it strengthens the foundation for the next major move upward. And if that sounds familiar, it should, because this pattern looks a lot like what we saw back in 2019, right before Ethereum's massive bull run. Back then, there were multiple fake rallies, sharp pullbacks, and plenty of fear. Everyone thought the market was finished, and that's when the real move began. It's the same emotional cycle every time. Fear near the bottom, disbelief during recovery, and euphoria at the top. Right now, we're likely in that disbelief phase again, where people are second-guessing the market just before things start to turn around. So despite all the noise, the evidence points to Ethereum being in a long-term accumulation phase, not a collapse. These wallet movements don't signal disaster, they're part of a much bigger picture. As always, the key is to stay disciplined, look beyond the headlines, and make decisions based on data, not emotion. Because in every cycle, it's the investors who keep their cool during moments of fear who end up winning big. Stay smart and stay prepared. Thanks for watching the Crypto Code. If you found this video helpful, please like, subscribe, and hit the notification bell for more crypto insights. Let me know your thoughts on today's video in the comments below. You can also check out what we do here at the Crypto Code by registering for one of our free workshops where we show you how we and our students profit in crypto, no matter if the markets are up or down. If you register for the workshop, you also get access to a free weekly trade alert. Attend our free workshop, take a short quiz at the end, and we will send you $10 in Bitcoin. No purchase needed. We've already given away hundreds of thousands of dollars worth of Bitcoin just this year alone. Just look for the link in the description of this video to register for the workshop. It will be worth your time. Our public trade record currently has a 93% win rate, and you can view it here. Best of luck with your investments, and remember to stay informed and stay safe in the crypto world. See you next time.